Hello, 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 and welcome. It is episode 126, can you believe it, of the Rent to Rent Success podcast. And we have an epic guest for you today. Steve Clark has joined us from the Scottish Property Podcast, and he's got lots to talk about with Scottish property investment. And this is going to be about a huge opportunity for those of you. And I get many messages from you who are living in and around London or other high cost areas in terms of properties, and you're wondering whether to invest further afield. Well, Steve himself invests 2.5 hours from where he lives, and he helps lots of other investors to get started investing in Scotland, where you get so much better cash flow and potential without investing in those dodgy areas that some people talk about. That I've heard about in Hull. So while I just catch my breath, welcome to the show, Steve Clark.
Thank you very much, Stephanie. Thanks for having me on. It's we've done a role reversal, haven't we? We're switching the hot seats.
Yes, and I, of course, was on Steve's Scottish Property Podcast. So do go over and listen to that episode, and I'll put a link below. And check out the Scottish Property Podcast because you get to listen to their amazing accents every single week. Or you can binge listen it and have it every day if you want to.
Thank you.
So, Steve, we were just talking because your story is really interesting because you started off in an unconventional role. So tell us what you were doing and how you got started in property.
So yeah, I started way back in 2006, which, as you pointed out, Stephanie, makes me feel a little bit old now. It was 16 years because I'm not that old. I don't feel that old. But yeah, I think it's about 1920 when I first started. I bought a flat just off the bridge from Edinburgh. So it was the kind of commuter towns from Edinburgh, which were cheaper. And it was a one-bedroom flat for £58,000 back then. And it was at times where you didn't quite require the full deposits. And if you negotiate a little bit of discount, that could be put towards your deposit. So I didn't require. I think I maybe required £800 or £1,000 just to top that deposit. So it was a very low entry point for me, and it kind of set the stage for what my property investment career was all about, because I didn't come from money. I didn't come from a wealthy background. I come from a very working class background, and I remember at the time I was a second year engineering apprenticeship, and I was on £4.36 an hour, and my manager had said to me, we really like the way you're working. And I think it was because I kind of avoided a lot of the health and safety, red tape that people were really, really big on at the time. And, I would quite happily climb up stuff and jump around and pull things around. So they quite liked my work ethic and says, well, if you could work a Saturday with us when it was quiet and there's no health and safety officers around, obviously, we'll give you Saturday overtime. And the Saturday overtime was like time and a half. And it worked out that, I don't know, it was maybe an extra £100 every Saturday. And the minute that was on the tables, I was like, I can afford a mortgage. Like, get me on the property ladder immediately. So it was on tiny wages, made a little bit on the overtime, and went for this flat, and obviously lower entry point. And just after a month of living it like a little bachelor's pad, started getting the sledgehammer out and coming up with creative ways of adding the value and opening the place up, and then just learning all the skills that your friends were joiners and some friends were electricians and tilers. My dad taught me how to tile the bathroom and stuff like that. So it was this kind of year's project of just me finding my feet and finding my craft, and then I'm walking into the bank a year and a half, 2 years later, and they're looking at the price index and Bank of Scotland and said, oh, your property prices went up, £24,000 in the last year and a half. And I'm thinking, wow, give me the money. And this was the kind of big brainwave idea at 20, thinking that I'm going to make it in property. I can keep leveraging, the free property that I kind of bought. So I pulled out the extra money at the bank, which this was coming up towards obviously the dreaded 2008 time. So pulled the money out of that property and bought a 3-bed semi-detached ex-local authority house at the peak of the prices. So, we all know what came next. A few months later, the crash came, and I'm sitting in negative equity in this house, and obviously pulled the money out of the flat. But, it was good. It taught me a lot of lessons, and I'm glad I kind of got stung with a property correction or a property downward market very early on in my career, because it showed you that it's not always glorious. It's not always the kind of market that we're seeing right now. It's not always just rising and going up in double figures. So yeah, that was an interesting starting at property.
Well, I love that you knew. There you are working on sites, and you're 19. And you just like, okay, let me at it. I'll go up anything. I'll do my own stunts. And they're all over it. And you're getting this overtime. And immediately you just think to yourself, right, I'm going to buy a property. What was it, do you think? What inspired you to just know straight away at 19, this is it?
I don't know. I've always had this belief that there's something more to life. Like we're not meant to just, you know, be the worker bees and you know, get a good job, get a career, get this mortgage for a 25, 30 years mortgage term, pay it off at the same time as saving for your retirement and retire at 65 or 67 or whichever the government dictates that you can retire. I always thought there was something more for it. And probably about 4 or 5 years previous, my granddad died at 62. And I remember always thinking, like, it was the first death in the family, so it kind of hit the family quite hard. But always thinking, like, he didn't even make it to retirement. What is the fucking point in life if he can't make it to retirement and he worked hard all his life? And it was quite a triggering point. And at the time there was probably two. Not, I mean, there weren't. I didn't have anyone in my family that was entrepreneurial or was into property investment, but there was two friends of mine at school, and it was quite interesting because they must have been such a huge influence. Because when I look at what I do now in property, both of them reflect what they do. Because I don't just do like the one kind of strategies. I like to do multiple strategies. So one of them had moved over from Holland and he bought these absolute scum flats, like the stuff that I avoid. And he bought 10 of these flats for like 10 or 12 grand each. Like that, you can imagine the tenant demographics in these areas. So I remember helping him out for, like, you know, some cash work when I was like 15, 16, and he'd be emptying out flats that these drug addicts have been living in, and they've absolutely trashed. And obviously, I'm filling up a skip just looking at the state of this place, going, "This is disgusting." But then I'm asking him the questions as I'm doing it. I'm saying, "So, how much rent do you get for this?" And he's like, "Oh, 425 quid a month." And I'm just typing into my phone, you know, a 7-year loan at 10 grand or 12 grand. Like, bloody hell, that's paid off in that time, and that's your cash flow. So I had this I had this trigger in my head. And then the other guy was another friend of mine, and his dad, he left the Royal Air Force Base nearby, near St Andrews in Fife, where we were at high school. And he left the RAF with big pension pot and a bit of payout and stuff like that. And he started getting involved in flips. But he was always walking about in like the working gear, and you drive about in like a beat up car or a beat up van. No one would ever think he'd have money, but the properties that he was doing near St Andrews was, you know, were flipping ruins and turning them into, you know, £1 million properties. And up there in that time was phenomenal to see these different people that were actually doing something and building wealth through property. So I think these influences maybe stuck in my head, and obviously the influence from my granddad passing at that young age. Just thought that, you know what, there must be something more than just a job to retirement.
That's so interesting, Steve, because it's so funny. The little influences that you get when you're young really have a lasting impact. And for those of us who didn't grow up, you know, where it was always known that you would amass wealth in this way, just doing that work in Holland, I think you said, when you were 14, 15, and
Well,
then seeing.
the guy was from Holland. He moved over to Scotland.
Doing that work in Scotland, right? And when you were 14, 15, and then seeing your other friend who's doing the flips in St Andrews, and you just thought, right, I'm all over this. And just because I'm so curious, so you bought that first flat in 2006 to live in. It was £58,000 for a one bed. And have you still got that one, Steve?
I just sold it literally 6 months ago, 5, 6 months ago.
Wow.
Yeah.
And of course, we're all on the edge of our seats. How much did it sell for, Steve?
Well, we saw a crash, and like we kind of alluded on at the start of the conversation, I don't really like buying the lower end properties. So the flat only sold for, was it 75 or 76,000?
Oh,
But
right.
the
Okay.
beauty of it was, and this is why I like the both strategies, is it cash flowed me phenomenally well. For like, one of the tenants that lived in it was a primary school head teacher. She stayed in it for 9 or 10 years, and
Wow.
never had a single issue with missed rent, missed payments, no maintenance issues, no major maintenance issues at all. So it was really interesting to see it from that side. Because I mean, traditionally 1 bedroom flats is probably the stuff that I wouldn't go for it in towns anyway. Maybe city centres I would, but, you know, external towns maybe not, or secondary towns I
Yeah.
wouldn't.
Well, what you just said there is a great point, because you can buy a property for 58 and sell it for virtually the same and still have it be an amazing cash flow in property. So you had it for around 16 years, if my maths is correct.
Yeah.
But what rent were you getting, when you sold it, before you sold it?
But then I was one of these ones that don't really put the rent up when tenants in it, because I feel like
Ah,
it rocks the boat, and I probably could have. And one of my business partners, actually, he owns a letting agent locally, and one of his clients bought it just as a kind of a growing concern with with the tenant in place. But the moment that I sold it, the tenant left, and he put the rent up like 100, I think it was 125 quid a month. So it was significant. It was like a 30% increase. So I was obviously collecting well below market rent for such a long period of time. But I felt, because I had bought it cheap, and I obviously didn't know any better. I've done a repayment mortgage as well. The debt was chipping down over the last 15, 16 years as well. So I chipped away the debt, cash flowed that full time, and still exited with an uplift in the value as well. I mean, even it wasn't a huge uplift. It was I don't
20 odd grand.
20%, maybe 30, 25%. It wasn't a huge uplift in that time, but it wasn't the best asset. It was just a cash flowing asset that it wasn't even bought right. And what interested me about it as well, because you look at the deals that you're doing now with 15 years experience, looking at going, I would never touch that. But then when you look back at the numbers and you go, well, it's cash flowed all this time. You didn't particularly buy it right, but property over the long term, as you can see, even going through a little crash in 2008, it still kind of recovered, and it still cash flowed the whole time, and it was still financially, a good investment.
It's very forgiving. So what was it, 300 and something?
425, 450, yeah.
425. So what I'm going to say is 450 then.
Hmm.
Do you know what, Steve? 86 grand. I just put in 16 times 12. That's how many months it was. 86 grand. It's so nice, as you say, and that wasn't unintentional. You weren't
Yeah,
an expert when you bought that,
no
but
education, no experience, yeah.
it works out so well. And we're going to come on to what you're doing now, which you really have brought all the knowledge and experience over the last almost 20 years to be able to have this cookie cutter approach. So you then went on to this three bed semi that you mentioned,
Hmm.
and you bought it, and then it went down in value. But has it now come back?
Well, I sold that one. I rented that one out what I did for about, God, maybe 5 years. At the back of that, 4 or 5 years, was I kind of licked my wounds a little bit, thinking that I was going to be this 20-year-old millionaire in property by buying all these properties, and the values going up. And when I quickly realised that wasn't the case, I kind of licked my wounds for 6 months. But when I was working, there was a few younger guys that were looking to get on the property ladder, and they were asking my opinion. And I remember just them looking at Rightmove and seeing these 2 and 3 bed ex council houses that they were looking at buying, and they were like that came down dramatically. But obviously, we were now getting the influx of repossessions on the market from the crash. So I'm sitting there, obviously having been looking for this 3 bed house, knew the area very, very well, all the areas, all the kind of house prices. I started looking at going, wow, you're getting this for that now. Holy shit, these are steals. So I spent about 4 or 5 years flipping properties. So I mean, on hindsight, and this is where I believe that my mind's quite good now, is on hindsight, I should have been selling 2006 to 2008, and on looking at the ones I flipped between probably 2009, 10 to maybe 13, 14, these are the ones I should have held, because they've more than doubled, some of them even almost tripled in price already. But at the time, I felt myself in this position where I had no capital, I had to basically start again. I was in negative equity from this flat and this house, that I just thought, right, here's a house here, a 2 bed house here. They were around about the 50, 60 grand mark, 70 grand mark, and I knew I could apply the skills that I'd learned through flipping this flat, do a lot of the work myself, and I would just flip them on and make a quick, maybe between 15 and maybe 22 grand. Like, they weren't anything daft, but enough for me to get in and out, do the work myself, put it on the market, and find my feet with renovations, and adding value, and a bit of negotiations, and getting the price right, and getting the numbers right. But obviously one of the first problems that I encountered was I couldn't get a mortgage again, because they were both in my personal name. So I just started going out with my wife, obviously girlfriend at the time, and she was 28 and no debt and no credit cards, and one of these quite traditional persons. So I said, look, can I put this mortgage in your name for the flips? And So she allowed me to put in her name, and end up having to put the credit card as a deposit and stuff like that. And it was just working hard to try and get the pulling in favour, sourcing material, just really finding your feet, finding your craft on renovations. But I remember at the time she was so dead against it and was like, if it was that easy, everyone would be doing it. But the market sentiment in a crash was, property prices, stay away from property, it's never going to be the same again. And there was a real negative feeling around it. So it was stepping out of that comfort zone when everyone around you was saying, no, you're going, right, nah, there's definitely opportunities here. I know these prices, I know what they could sell for. So, I ended up doing that in her name, which obviously, again, in complete, not tax avoidance, but in theory, they were her properties to live in because she was living in them. So there's no capital gains tax at all. But again, it was something that I did without really realising that I was doing, going, oh, right, there's no tax pay on these, effectively. Built up the pot doing that for a number of years before I started to add back to the portfolio. But then when I knew I was adding to the portfolio, I knew I was getting better at negotiating and buying right and figuring out the numbers. And then the renovation costs were kind of tied down as well. So then started to evolve a little bit more from that experience of trying to recover from the credit crunch. But in hindsight, looking back, these are the ones I should have kept because, like I say, they're all like phenomenal assets now.
Amazing. So I love that you've built it up, and you really have done the hard yards here. You've not just sprung up from nowhere.
No, and it's quite. I do encourage like the guys that I bring onto the workshop is to kind of get a little bit involved with the renovations to start with, and definitely not as long as I did it. But if you could rip the property out and understand the makeup of the property, it just helps you really understand renovations and how to add value to the properties. But yeah, slowly, bit by bit, it was like I'd get a gas engineer or I'd get someone. Slowly, just each property, I'd have that little bit more cash that I could pay someone to do bits and pieces, and it would just speed up the process. And I knew that having outsourcing that, I just speeded up the process. Each one just got a little quicker and slicker each time, to the point where you didn't have the luxury of having an abundance of cash, and there wasn't a huge amount of profit in it. So it was always keeping them tight, paying for what you need to pay and get in. But then eventually you realise that to scale this at size, and you need to outsource. You can't be doing this stuff on site at all anymore.
Yeah, you got to deal with contractors.
Yeah.
Anyway, you would have been really good at that. So let's move on. So now you've got this approach where you're helping people from over the UK to invest in Scotland. So it would be great if you could give us a typical example, or maybe an example from one of the clients you've worked with, about what they bought, the cash flow, and all of that.
Yeah, sure. So it happened probably about 3 years ago. I hadn't really added much properties to my own portfolio for a few years, and the market was getting very hot in the central belt in Scotland. I'm only 15-20 minutes from Edinburgh, so I'm right in the commuter catchment. So as Edinburgh's booming, the rest of these areas are booming, and the numbers just never made sense to add them to the portfolio. The market, the economy is good here. There's a lot of jobs, train links to Edinburgh. So I discovered like a premium product on the flip projects I was doing, and I was selling them to a lot of Edinburgh buyers that would want to kind of commute into Edinburgh. So I was getting a premium for the flip. So rather than getting a few £100 cash flow, making a quick 40 grand on an easy flip was a lot more. But I felt like my wealth wasn't growing, and I was getting too focused on flips and not onto the investment. So during my working career, I worked in the oil and gas industry, and I spent a lot of time in Aberdeen, which is about 2.5 hours from me. So I knew the city very well. I did attempt to go to university when I first left school there for 6 months. So I knew the city very, very well. When I saw the thing with oil and gas is Aberdeen's classed as the European oil and gas capital, and it's very much focused on the oil and gas industry. Now, when the prices of oil fell in 2015-16, the house prices fell at the back of it. But I do remember working up in Aberdeen in 2000 and driving up there, and the whole country's in a depression, and it's the credit crunch, and there's a lot of doom and gloom. And you drive to Aberdeen, and the second you got within a few miles of Aberdeen, you just kept seeing Porsches and Ferraris and RS cars, and it was always the kind of, what the hell's going on here? But the price of oil was at a high. So Aberdeen never ever saw a drop in the recession in 2008. And I found that very interesting at the time. And then obviously fast forward to 2015-16, I'm watching the prices fall again while the rest of the UK is going on a very upward trend. So I took a trip up there one day, and I played it very, very safe when I started to look at Aberdeen. I looked at You've got your main streets, Union Street, you've got King Street that goes up towards your universities, very much the main veins of the city centre. I just started looking at city centre flats. I booked in a few viewings and on the morning I went up, I had a view in a flat in Dunfermline, and this is the exact response I got. Was the response that people will be used to now was, you walk into the estate agent showing you the property and it's saying, yeah, you know how the market is. It'll be at a closing date on Friday. Like, that's just it. And then I thought, all right, here we go again. And I went and I drove the 2 hours up to Aberdeen, and I had the viewings up there. So the first property I looked at was a property on King Street. So it was only 200 yards from the university in Aberdeen. So obviously I'm trying to play it safe. If the economy's been hit by the oil and gas industry, but nothing's affected the universities, then the university income and the students are still there. There's nothing affecting this rental income. But I've done a lot of due diligence and research, and I'm quite analytical when it comes to the numbers. And at the time there was 1,062 properties on the rental market. Now, I didn't know if that was a good thing or a bad thing. So then you start looking at other cities around Scotland, and you realise very quickly, holy shit, this is a bad thing. Like, this is a lot. We've got a huge supply and demand. The oil and gas companies that were renting all these properties have obviously just gave them back to landlords, and an influx. The people that maybe go out and work in Aberdeen Monday to Friday have all left, and they're staying down in Newcastle. There's a lot of people from down south came up to work, and there's a lot of good money in the city. And I just kind of started to build up this picture of what was happening. So the first one, this one I looked at in King, it was previously bought for £100,000 for a one-bed top floor flat. It was on the market for 60. And the estate agent was saying, well, Aberdeen market, they'll probably take a cheeky offer. And I said, well, what are you thinking? Obviously we've got this additional dwelling supplement in Scotland that's even less than in England. It's even more than England. It's 4%. And I said, well, would they accept 40? And they were like, yeah, probably, like that. And I thought, wow, this is the market I need to be playing in. Like, everyone's running away and everyone's saying stay from Aberdeen, the market's crashed and all this kind of stuff. I'm thinking, right, I need to look at this more and more. So I ended up going for flats in Union Street, flats in King Street, played it very safe, city centre flats, stuff I would rent. But what I did notice was the 1,062 properties that were on the market were very much, it was in a time warp. They were all Magnolia, They were all pine furniture, but because the oil and gas prices the city was booming, no investors or landlords ever spent any money on their properties. So, just say, for instance, their one-bedroom flat was worth £120,000. It's now worth 60, 70, and they need to spend 15, 20 grand to renovate it, but they were getting £750, £800 a month on the rent. Now they're only getting 400, 425, 450. They're not wanting to spend that money on it. So it was just like, no, just keep it on the rental market. And all you kept seeing was people fighting and lowering their prices to get the property actually filled rather than vacant, than with a void. So my kind of outsider looking in thinking, well, if I go up here and renovate these properties to the same kind of standard I'm doing a flip down the central belt, if I can put in the grey kitchens, the grey walls, and just modernise the whole flat, you're going to be putting up a premium product onto the market. So the first ones were these ones in Union Street and the King Street one. And I met a letting agent that I'd been working with, and he says, what you want to put on it? The flats in the block and in the street are marketing at 425, and they're even going to 400 quid. I says, I want it on at 550. And he was like, no, you won't get it. And I'm saying, I'll get it. People are willing to pay a product. If you're the only one with a premium product on the market, it's yours. So we put it on the market at 550, and it went within 24 hours. No one found that everything sat in the market for months and months and months. So we kept this process repeating, which I found was a unique point, because I was the only one that was going to run into Aberdeen, and everyone was running away from it. And you're looking at these yields going, you're buying these flats for 60 grand. Their end values are now up towards £100,000. So you're getting all the money back out of them comfortably. You're then renting it for 550. The cash flow wasn't phenomenal on them, but I was anticipating that if I'm buying at this price point and I'm buying for kind of capital growth and recovery as well as the cash flow. So yes, I started to do that, and that started to build a portfolio again the last few years quite substantially. But then obviously doing that along with putting on social media and the Scottish Property Podcast, I did have a lot of investors kind of reach out from down south particularly, and they're looking at the numbers and they're like, wow. And the hard thing about it is the ones I'll kind of work with is the ones that know me and know know, like, and trust me that I've followed my journey for a few years as well, and know what I'm doing. Because if you look at it, it isn't as happened as much now, but certainly a couple of years ago, if I'm saying to someone, look, do your due diligence on the package that I'm giving you. Here's this 1 bedroom, 2 bedroom flat. It's going to be worth X. The rental income is going to be worth Y. If they go and do a little bit of due diligence, they'll just see all the crap ones on the market that are selling at 400. And I know I'm getting 600. But so it was very hard to kind of convince people otherwise. And I basically, so on the ones that really followed me were the ones that kind of, well, I know you're experienced and I know you're going to Aberdeen for a reason. You're not driving up there and building a team of trades and project managers in your team and your management team if you didn't think it was worth it. And I'm like, no, absolutely. That these are, when you do get the odd down valuation, but generally you're hitting them every time, and the money's come back out. And in the UK right now, you're not getting a lot of opportunities to do that.
Yeah. And at those prices for purchase, even if, let's just say, rentals went down, it's still
cash flows. Yeah.
It still cash flows. So it's very low risk from, an outsider perspective. I can absolutely see how people will be knocking down your door. I mean, people are asking me about this. Oh, sorry. That's my doorbell. But we're in Newport, you see. And in Newport, again, it's a bit like what you're saying. It's good value. And recently, our builder, actually, he does some of his own, and he finished 2 flats that we thought, normally we thought maybe about 600 1-bedroom flats, quite small, but very nicely done. And he wanted 795. And you know exactly what you said. They went for 795 to the first viewers. And so we've just got a commercial to resi property that's 4 flats, 4 self-contained flats, and that's gone at what did that go at? Yeah, we were thinking about what to put that on now, and we're thinking, oh my gosh, we could go near 795, which is, I'm not sure we'll go as high as that, but that's 195 more than we were thinking.
I mean, I think it's a good thing as well. Like, I mean, the standard of, I've got this thing that I'd never ever let anyone say it in my circle or anyone I'm speaking to, but you know that old saying that landlords just say, it's just a rental. I never let anyone say that, because why should a rental property be any less standard than you're prepared to live in? So
Yes.
I put all my properties, like my rentals, to like, it wouldn't be something I wouldn't live in. They're stunning flats. They're done at a high standard. And I think we're in a culture now, a little bit, a culture where we're kind of getting rid of that slum landlord type one, where they just don't give a shit. They'll put the property out in any condition. They won't keep up with the maintenance. People expect that premium product, and the economy's good. People are willing to pay for good quality. So I think it's slowly getting rid of the crap, and I think we're probably collectively, like all the property investors that you maybe see on Instagram that we're all in this community with, I think we're all doing this, raising the standard of properties, and we're bringing the standard of rental income, the private rental sector, up, which can only be a good thing.
Absolutely. And Steve, so you started this new strategy up in Aberdeen in 2015-ish, excuse me. And so you're doing it to this day. So what could somebody expect if there's people listening, maybe the investment to invest in their own area doesn't make sense financially? What sort of thing could they expect in terms of purchase and rental?
Purchase and rental price, I'd probably looking at like a city centre flat. If it was looking like it's funny because I look at the trends. Like every month we're doing a Scottish Property Podcast Network event in Aberdeen, and I get the letting agent to come through and give the exact figures of what's available: 1 beds, 2 beds, 3 beds, houses, all the ranges, and we look at which ones are in demand, and you know yourself, like it varies and jumps about. So the 1 bed flats for a while were the ones to go for. We raised the rental prices up so much that they're almost at the 2 beds, that now the 2 beds are the ones to go for, and it kind of just keeps correcting itself. So if you're looking at a one bed flat, a good one in the section in Aberdeen at the moment, you'd be looking at, around the £50,000, £60,000, depending on the area you buy. And I don't have bought a couple in streets that are not the most desirable ones for around the £40,000 one. And on these ones, I spend £15,000 of the renovation. So by the time I add in I've got no ADS, I've got my legal costs and my buying costs, and if I've got any costs of borrowing, I'm used to spending about 15,000 on that renovation, 20,000, and these valuations have came back at 80,000 on these flats. So I'm putting a 75% loan to value mortgage on these at 60,000 and getting all the money back out these deals. So, but there is some, and so your 600 flats could be like that. There's a little bit more premium areas where you can go that a little bit more, and then if you go into the west end of the city centre, which is a prestigious area, is the ones that I really like buying. And there's 2-bed flat that I bought at the end of last year for 112,000, and we spent 20 grand on the renovation, but the valuation came back at 200,000. And
Whoa.
So a 75% loan to value on that's giving me 150 grand, all the money out. That rents for £1,000 a month. So the cash flow is phenomenal.
This is sorry, is that after your finance costs, etc.?
No, so £1,000 a month the rental roll, but the mortgage on that and interest only is only 289, I believe it is.
Wow.
So that and my management costs, and I always put my bit aside for maintenance. It cash flows phenomenally well, that one.
I love that, because
what I like about this stock is see what we were kind of touching on earlier. See if the market does recover or crash. This premium stock that we've got here, this is the one that will bounce back the quickest. So right on where the back garden on this flat is, it looks onto on an area of Aberdeen called Rubislaw, and Rubislaw's got I think second or third most expensive postcode in Scotland. It's the houses where the billionaires live. The oil and gas billionaires that own all these oil companies. They live right behind it. So this is a premium, location. And when the market recovers, this flat probably in 2015 would have been before the crash, where it was sold for 325. Yeah. So if it recovers back to that, then you've got your cash flow and you've got a great capital appreciation on these.
I love what you're saying, because it's a premium property. You're getting it for 112. You're all in for 132. You're then refinancing at valuation 200, 150 in your hand, and then you've got a little bit of money back for the next one, and you're getting £1,000 a month in rent, cash flowing over £700 a month. So you're almost into smaller HMO territories in terms of the cash flow, but without the additional management.
Yeah, absolutely. I do like these more premium products. They are harder to find, obviously, because they're in premium locations. But I do like finding these. These are the ones that I like. If I go for single units now, these are the ones I like to try and go for. But if I'm going for portfolios, I don't mind buying a mixed bag, and they've got some a bit undesirable properties in it that I'll probably shift when the market kind of recovers. But yeah, it's kind of trying to find that balance in the portfolio and having good quality assets and good quality tenants that you can deal with, and it makes your life a lot easier and your portfolio a lot easier to deal with.
Yeah, I love your story, Steve, how you got started, 1920, and you got right in there. Then you had a pause, and then you restarted again, and that you've had different strategies, from flipping now to buying and holding in Aberdeen, to helping other investors get started. I mean, I know you must get knocked down in the rush of people trying to say, Steve, get one for me. But we also didn't talk about that you worked offshore for many years. So tell us about that and how properties really helped you.
Yeah, so the offshore was any job that I've ever worked in. It was always to try and get myself more time back rather than the money. So flipping properties back to try and recover. I was always doing Saturday shifts and Sunday shifts, 12-hour shifts, just to get the cash together to go and get the materials together for the next refurb. So you always work more, and then it was always these changing jobs. So the offshore was very much the same thing. I thought, well, if I can go offshore and I can work away for 2 or 3 weeks and come back for 2 or 3 weeks, I can get a few weeks of solid time to, you can probably tell by me, it wasn't to sit on my feet and watch Jim McKell during the day. It was going to be to work on these properties and do flips or add to the portfolio. So yeah, I went in 2012, changed my, I stayed with the same company, but we're based out in Aberdeen. And what they would do, they would send you ad hoc to trips, and we would have the North Sea and the West Africa. So a lot of the time through my working life, I ended up doing a lot of trips to North Sea, Shetlands, which were quite rough and rugged in the North Sea. But a lot towards the later stage was down in Africa, Ivory Coast and Equatorial Guinea and stuff like that. So they're really, really cool places to travel to. But you were away at the beck and call of a contract and a job for maybe 4 to 7 weeks at, and the money was good, and it got me time to keep working on my property business while I was at home. But you were certainly missing out on life, that was for sure, because every time you could bet your bottom dollar that every single time there was a wedding, a
Yeah.
funeral, a birthday, you were away, and that causes a bit of stress. When you kind of start to like you start to kind of wish your life away. So when you go, you're working. You'd maybe be sitting there and doing some work at night on your property business and looking for deals, but you're just kind of wishing for that date when you're going back, and then when you're home, you're dreading the date when you're going away again because you're wanting to enjoy your working life. And it kind of come to a head when my wife we went through IVF for a number of years, like 4 or 5 years to have our daughter. And when my wife was pregnant, I missed like every scan, as you can imagine. So we were like coming back, and the moment my daughter was born, I just instantly had this kind of thought of, no, like there's more to life than this. I'm not going to work away and sacrifice my life for an income or trade my time for money. I love property. Let's go for it. Let's go for it full time. And there wasn't. I wish it was more methodic. The people that I teach to come on my workshop, it's always like, line up your income first before you decide to throw the towel. But I'm quite in a high paying career in subsea oil and gas to go into property. And I mean, the portfolio was good, but it wasn't phenomenal. So you go through iron flips and other strategies. So it was. I did enjoy the job. It just was the life that you didn't. It was going to be a very, very quick life. Now, one of the guys who first came on my workshop and through my kind of program was he worked offshore, and he went from when he was 18. I only done it for when Maya was born in 2016, so it was only 4 or 5 years I kind of done it for a period of time. He done it since he was 18, and he was, by the time he was at 39 when he quit last year, he's like, I've spent 9 solid years of my life offshore. Like, that's a long time of your life to miss out on. And what you kind of find yourself falling into this offshore trap. It's everyone will make really, really good money, but they'll be sitting offshore figuring out ways to spend it because they feel like they're making this sacrifice, so they deserve to spend it. And it's on absolute shit. The more you make, the more you'll spend. And no one was kind of planning this future and saying, well, if we've only got this offshore life for a while, why not just put in assets and build it? And no one had that mindset. It was always like the more they made, the more the lifestyle went up, to the point where they could never ever just go and get a job back on shore because their income would never meet their lifestyle expectations. And I never saw any happy endings from it. Like the amount of guys that you'd see that were in their 50s, late 60s, still working offshore, and they'd be saying, why are you still here? Oh yeah, well, I'm on my second or third divorce. My kids don't speak to me because I've not got a relationship with my kids, and I'm thinking, this is not the life that you want to follow that path. And I never saw anyone make it really good.
Yeah, I love that. You have dropped so much gold today, just from actually just get started, go forwards when other people are going backwards. When you first started investing in property, people were saying, don't invest in property. When you started investing in Aberdeen, people were saying, don't invest in Aberdeen, but it's worked out really well for you. And then the last one from, the book that everybody knows, Rich Dad, Poor Dad, it also says, with your income, buy assets. And the profit from your assets buys your luxuries.
Yeah,
and
absolutely.
When you put the money from your income into assets, those assets always make money for you, whether you're working or not. So, and that's what you take people through, I know, in your mentorship. So as we draw to a close, Steve, I'd love if you explain a few about that, because it's really been life-changing for people. You've just said about the guy who had been working offshore for over 20 years and was with you for a short while and has now been able to leave his job through buying assets.
Yeah, absolutely. It's I saw this opportunity when I started the podcast, that there's a lot of property education out there, but I feel like there's a lot of education that are based on marketing and sales. Like, that's what they know, so they get very good at that, and they fill rooms and they make a hell of a lot of money. They make a hell of a lot of money, more than they do doing property, and that's why they don't do property. And I always feel like when you're doing this game day in, day out, you always see the bits. We can all get information on YouTube. We can all get information on listening to great podcasts like this, and the guests that you have on, and you'll always get that bit of information. But the bits that when you're doing it day in, day out, you always find the bits that fill the gaps in. Do you know what I mean? So you can learn all the theory base all you want, but there's always there's always these little bits of knowledge that actually that make it work. You know what I mean? That you get. So I done this low hanging kind of, not this tens of thousands of pounds for a mentorship or a program. It was basically something that it was kind of through COVID, to be fair. I was like, I'll add this on to my property business. I'll do 3 workshops a year, and it's over 3 days. And it'll just be this start to finish, that point where even if you're starting out, you can get the right knowledge to day 3 leaving and crack on, take action. Or if you're stalling and you're not growing that well, you can get a whole lot from it as well. And it'll basically start off from the start of figuring out exactly what your goals are, what your income is, figuring out what your goals are on property and what you want to achieve. And then I take it on this kind of journey from how do you source properties, like all the stuff that we do, whether it's on the market, off the market, how do we appraise them, the appraisal processes, give them my spreadsheets, my templates, how we break down all the numbers, how we work out all the renovation costs, and so every single number's factored into the deal. And then we look at how do we negotiate it for that price we need to be. So we play negotiation games, we talk about negotiations and educate the mentees or the attendees on the negotiations. And then we go into role playing. So I'll bring up, so this is when I go into, after the kind of day one, it's always onto real life examples. It's not just theory based, it's actual, here's the story. So I'll give examples of deals that I've purchased, and I'll give one person the card for the seller, and I'll give them the unique situation of who they are and what they're doing and why they're looking to sell the property. And the person that's selling's got to try and ask the right questions to get it. Now, what a lot of the educators will teach will be like, you look for a motivated seller, and everyone always thinks that this motivation is like a bad thing, like there's a death or there's something that someone's really desperate to get out of the property. And what I've always found is it's never, or it's very, very rarely a bad thing. A lot of the opportunities are actually people are needing to sell it because it's a positive thing. They want rid of it. They don't care what they get for it as long as they get rid of it. So we go into details and negotiations, and then I kind of break down the strategies that I do, and it is buy-to-lets and buy-to-lets, single vanilla buy-to-lets at scale. How to source them, how to add the value, how to refinance them, and then I do go into flips and talk about flip strategies, and then we do these strategies, and then I go into sourcing. So if you just want to source properties for others and how we do that, and then I'll utilize all the examples of the 3 strategies with all the case studies, and I'll make it really engaging, and people ask questions and break down, because I think that's where the value is. When people ask the questions on the case studies and how was it done and what was the problems that you encountered, these are when you kind of start to find all the real life. And then we finish up on the last day by raising finance. So if you had no money to do it, how do you raise the money, and how do you raise the money to scale up? Like what people in property do, they need to raise more funding to scale up their businesses more. So we go into detail on that. So that it sounds like a long time doing it for 3 days, but it's a lot of information to try and cram in for 3 days. But I actually love it. At first, I started doing it thinking that you looked at, I remember looking at just before coronavirus came in, I looked at like what I was doing and what I was spending a lot of time with. And a lot of time I was posting on social media to grow my brand and my following and to attract deals and professional database of people that knew, like, and trust you. But what I ended up doing was I'd be replying to probably 40, 50 messages a week of people asking me advice on property. Well, I'm looking for this property. How do you get started? And what do you do? And so the podcast came about, and we thought we'll educate through the podcast, but people still ask you questions. So it was one of the things where there's obviously an opportunity to monetize it, do it in a ethical, morally good way, that I'm actually doing these strategies. That's what I do day in, day out, and I'm going to teach it. I'm not going to pretend I know what I'm doing and try and teach it. I'm doing it. So I actually got the first one I did. I got this adrenaline buzz from it, like it was rush. Now I've competed in martial arts for years, and I put it to that. It's the same kind of feeling that the first one you're absolutely crap on yourself, and you're going on stage in this room full of 20 people, and I'm just nervous. But the adrenaline and the buzz I'm getting from watching people, like you just see the lights just go on, and it's interesting to see what makes the lights go on for someone. Like maybe see a case study and I'm like, wow, I know where that property is. I know you just explained to me how you achieved it, how you got it, how you negotiated it, how you funded it. And it's like, you just see the lights going on and people go, wow, this is possible. And I love that feeling of showing people, like, kind of like, look, you're in the dark a little bit. This is what's possible in property, and anyone kind of can do a little bit of knowledge.
Absolutely. And the other thing is that when people join you on your mentorship, if they don't have the time, maybe they're working offshore, maybe they're, as I say, not based in Scotland, so maybe they don't have the time or local knowledge, they can work with you and you can find just for them. So it's a phenomenal package. Now, I know that people can find you on Instagram at Stephen Clark Property. They can also find you along with co-host Nick Ponty on the Scottish Property Podcast. So do tune in, guys. It's an amazing podcast. And where can people find out more about your mentorship, Steve?
So you can look on the website. It's called thisisproperty.info.
This is Property.
Yeah, simple.
Great name, isn't it?
Yeah, it was actually my wife that came up with that when I was coming up with the first workshop. What will I call it? This is property.
I love it. She's good.
So that's what it's called. It's just we do them 3 times throughout the year. I've done one in Aberdeen for the first time at the start of the year. I've got one in Edinburgh, and a couple of months ago one in Glasgow towards the end of the year. So I'm trying to spread it around Scotland a little bit so people don't have to travel as far and don't have to travel too much. But yeah. Really
Thanks so much, Steve. It's been amazing to have you with us today. If you want to know more about investing in Scottish property or investing in property in general, do check out thisisproperty.info if you're interested in mentorship. But also, if you want to see Steve's properties, the sort of developments and projects that he has on, do check out at Stephen Clark Property with a V, at Stephen Clark Property on Instagram. Also check us out. We're at Stephanie T Property on Instagram. And until next week, remember, have a great week and believe bigger, be bolder, be a game changer. See you soon, guys. Bye for now.